Well, it's a big week for oil and gas companies. Their earnings this week being released. We did also just get those oil inventory numbers. And earlier this morning, we heard from ConocoPhillips about its third quarter. So here with his reaction, outlook on the other big oil companies that will be reporting this week, what we should be expecting on the crude front. We're joined by one of the most accurate oil and gas analysts out there. He's Brian Youngberg, an analyst at Edward Jones. Good morning to you. We are seeing some pressure building here in the crude oil trade today following that build. Your reaction?
Well, the inventories did rise this week, and this is the second week in a row we've seen an increase after a few months of decreases, really since March. And we're really just not seeing demand in the U.S. pick up, and we're still waiting for that. I think it will come sometime here soon. It may end up being in early 2010. We are seeing positive signs from a demand standpoint. Internationally, China's demand has been up now for 3 or 4 months straight. So I think it's really more international growth is going to lead this market ultimately.
Well, with ConocoPhillips, the company you cover, they reported a 71% drop in profit. Margins are going to continue to come under pressure if we see that the price of the commodities themselves come down.
Oh, sure. And, the companies that are reporting right now, BP, ConocoPhillips, so forth, earnings are expected to be down quite a bit. BP was down about 50% yesterday. Conoco down about 70% today. I think Exxon and Chevron will be down somewhere in the middle between those two. Obviously, prices are down from a year ago right now, but they're at least moving back up. That's a positive from an energy company perspective. It's not great for consumers, obviously. But markets are driven by supply and demand, and I think we're going to see demand pick back up here as the global economies pick up.
I'm looking at your most recent note to investors, and you highlight as the biggest risks right now to the buy position you have on ConocoPhillips as a major fall in commodity prices and changes in currency exchange rates. So given the activity we're seeing in crude and in the U.S. dollar, how much of a risk is there to this buy call you have?
I really think in the near term, I don't think there's much risk at all from the standpoint of we think oil and natural gas prices are going to continue to rise as we move into 2010. Again, oil will be driven by international demand. U.S. demand for oil probably peaked in 2007, and it'll improve, but it won't improve back to those levels. It's really going to be driven by Asia, obviously China, India, places like that, as well as Latin America, Africa. That are going to continue to grow their economies. And I think natural gas, which has been depressed lately, really with high inventory levels and slack demand here in the U.S., I think we'll see that improve as we get into 2010. Demand is still going to probably not catch up to supply, but I think we'll at least see some improvement, and we think it's a great time for investors to look at energy stocks, including ConocoPhillips.
You also are looking for ConocoPhillips to sell assets, reduce their debt right now. How likely is that?
I think it's very likely. They announced this about 3 weeks ago or so, and they're really trying to get the growth going with this company. This company has gone through a lot of acquisitions over time, and the growth has definitely stagnated. They have a lot more debt than their peers, and they need to right-size the company, basically. And I think doing this will help the growth. It'll help get the company back to where it should be from a balance sheet standpoint, and hopefully, get the company going again from that standpoint. Right now, they have a lot of headwinds, or really 2 major headwinds. One is their exposure to North American natural gas, which has been weak, and that's one reason why it's underperformed here this year, as well as refining. And they're really good at refining. The problem is refining is just a tough business, and they rely on refining more than most of their larger peers.
How does this set the table for the rest of the energy earnings that we're going to be getting this week, Exxon and the like?
Well, BP hit a home run yesterday. They easily exceeded expectations, and they were up on that news. I think ConocoPhillips, their news today was very good. They exceeded expectations by about 5%. Production growth was good. Their cost-cutting efforts seem to be on track. I would expect ExxonMobil and Chevron to come in again, probably with earnings down about 60% from a year ago. The big questions with Exxon really is their growth outlook. Exxon has really struggled on production volume growth. Really being the biggest company, it's obviously very hard for them to grow.
Right.
And then with Chevron, just they've had some very good growth here lately. Are they going to be able to keep that going forward?
All right. Thank you so much for joining us live and giving us that sense of what to expect this week. That's Brian Youngberg of Edward Jones.